Welcome to our podcast, where we share our professional knowledge and experience for those considering commercial mortgages or loans. If you are in need of commercial mortgages or loans, contact us for a no-obligation free consultation. Let's start today's episode. Commercial Property Bridging Loans Guide: Essential Tips for Success. Commercial property bridging loans are a short-term financing solution that can help businesses and investors bridge the gap between buying a new property and selling an existing one or securing long-term financing. These loans have become increasingly popular due to their flexibility and swift processing times. By providing quick access to funds, commercial bridging loans enable businesses to seize valuable opportunities in the property market and ensure a smooth transition during property transactions. Understanding commercial property bridging loans. Commercial property bridging loans are a valuable financial tool that can help you quickly access funds during transitional periods. These loans are typically short-term, secured against commercial property, and aim to bridge the gap in financing before you can secure longer-term finance or repay the loan through another means. It is common to use a bridging loan for purchasing or refinancing commercial properties when there is a gap between selling your current property and buying a new one. This could last up to 6 months or even more. This type of loan is processed faster than a mortgage, which can come in handy during time-sensitive transactions when securing timely funds is crucial. Before opting for a commercial bridging loan, it is wise to know that these loans generally come with higher interest rates compared to traditional mortgages. This is due to the short-term nature of the loan and the risk factors associated with a fast financing process. They are often seen as a temporary solution until you can secure a long-term financing option, such as a mortgage. Commercial bridging loans can be used for various purposes, such as buying new office premises, solving short-term cash flow problems, or investing in new markets. The overall use of the property must be more than 40% commercial for a loan to be classified as a commercial bridging loan. When searching for a commercial bridging loan, it is crucial to work with a trusted financial advisor or a mortgage broker who can guide you through the process and help you access the best available loan options in the market. Make sure to weigh the pros and cons, compare different loan offers, and choose the one that best suits your financial needs and situation, ensuring a smooth transition during your commercial property dealings. Advantages of commercial bridging loans. Firstly, commercial bridging loans provide you with the opportunity to access quick funding when purchasing commercial property. Traditional long-term financing can take weeks or even months to secure, but bridging loans can be arranged much more rapidly. This speed can be essential if you need to close a property deal quickly or outbid other interested buyers. Another advantage is that commercial bridging loans offer flexible short-term finance solutions. These loans are typically designed to be repaid within 12 to 36 months, allowing you to bridge the gap between buying a new property and arranging more permanent financing or selling an existing property. This flexibility can be attractive if you require short-term financial support or if your long-term financial plans are still evolving. Commercial bridging loans can also help improve your business's cash flow. If your business is experiencing a temporary dip in cash reserves, for example due to seasonal fluctuations, a bridging loan can provide much-needed liquidity to keep your operations running smoothly. Once your cash flow has stabilized, you can repay the loan and regular business can continue. Additionally, since commercial bridging loans are secured on commercial property, they can be tailored to meet your specific financing needs. Lenders will typically consider your individual circumstances, giving you the flexibility to negotiate terms that best suit your situation. This means that you can potentially arrange a loan that aligns closely with your financial objectives and minimizes the overall impact on your budget. In summary, commercial bridging loans can be beneficial for your business by offering a fast, flexible, and tailored financing solution. Whether you need to secure funding quickly, manage short-term financial challenges, or adapt your financing arrangements to your specific circumstances, commercial bridging loans can be a valuable tool in navigating the commercial property market. Applying for commercial bridging loan. When considering applying for a commercial bridging loan, it's essential to understand the steps and factors that influence the application process. To secure the best loan for your business needs, considering various lenders and comparing their offers is crucial. Getting assistance from a commercial mortgage broker can be beneficial, as they have expertise in the market and can help you find the most suitable lender and favorable terms for your situation. Before applying, understanding the eligibility criteria for commercial bridging loans is important. Lenders have different lending criteria, which may include the property type, loan purpose, and the borrower's creditworthiness. Generally, having a clear exit strategy, such as refinancing with a commercial mortgage or selling the property, is a crucial aspect of your application. Interest rates for commercial bridging loans tend to be higher than those of traditional mortgages. Hence, it's essential to research and compare rates offered by various lenders and be aware of any additional fees that may apply, such as arrangement or valuation fees. Keep in mind that bridging loan terms are typically short, ranging from a few months to a couple of years, so the faster you can repay the loan, the less interest you'll pay. To enhance your chances of securing a commercial bridging loan, preparing a comprehensive financial plan is vital. Providing detailed information about your business, financial projections, and property valuation can help demonstrate your ability to repay the loan. Additionally, seeking professional advice on structuring your loan application can give you an edge, as experienced brokers may recommend tailored solutions that improve your chances of approval. In summary, when applying for a commercial bridging loan, it's crucial to consider various lenders, understand their criteria, and be prepared with a comprehensive financial plan. Don't hesitate to seek assistance from experts in the field, as their knowledge can help you navigate the application process and secure the most favorable terms for your business needs. Key features of commercial bridging loan. When considering a commercial bridging loan for your property needs, it's essential to understand its key features. These loans are typically short-term financing options that help bridge the gap between selling your current property and purchasing a new one. They enable quick access to funds for business purposes, and the following are their main characteristics. Secured, commercial bridging loans are secured against the property being purchased or refinanced, which means if you fail to repay the loan, the lender has the right to take possession of the property to recoup their losses. Interest rate. These loans typically come with higher interest rates compared to traditional long-term financing options like commercial mortgages. However, since the loan is for a shorter term, the overall interest payable may not be as significant. Arrangement fee. Lenders often charge an arrangement fee for setting up the commercial bridging loan. These fees can vary, so it's essential to compare different lenders and understand the total costs involved before proceeding. Loan-to-value, LTV. The LTV ratio is a key factor in determining how much a lender is willing to offer you. Typical LTVs for commercial bridging loans range from 60% to 75%, depending on factors like the property's type and condition, and the lender's specific criteria. The higher the LTV, the more funds you can access, but you'll need to have a sufficient amount of equity in the property. Monthly payments. Due to their short-term nature, commercial bridging loans usually require interest-only monthly payments. This means you only need to pay the interest charge and not the principal loan amount during the term. At the end of the term, the full loan balance must be repaid, which typically occurs when you secure long-term financing or sell the property. As you evaluate your financing needs, it's essential to consider these key features of commercial bridging loans and how they align with your business objectives. Discuss your options with a financial professional to ensure you make the best decision for your circumstances. Utilization of commercial bridging loans. Commercial bridging loans offer fast, short-term financing solutions to help you with your commercial property transactions. They can be utilized in various situations to bridge the gap in your finances. In this section, you'll learn about some common uses of commercial bridging loans. Firstly, bridging loans can assist with property chain issues. When you're purchasing a commercial property and there's a delay in selling your existing one, a bridging loan can provide the necessary funds to complete the transaction on time. This prevents you from missing out on a potential opportunity. Another purpose of commercial bridging loans is to help secure a deposit for buying a commercial property. If your cash flow isn't sufficient at the time, taking out a bridging loan allows you to acquire the property and meet the deposit requirements, without risking losing the property to another buyer. In case you're seeking property deals from auctions, a commercial bridging loan can be useful. Auctions often require full payment within a short period, making it difficult for businesses to arrange traditional financing on time. With a quick auction turnaround, bridging loans can help you secure the property while you arrange for longer-term finance. Aside from that, commercial bridging loans can also provide finances for renovating commercial properties. Renovation projects often need immediate funding to cover the cost of materials and labor, which is where the fast approvals and flexibility of bridging loans come into play. Keep in mind that commercial bridging loans are designed for short-term financing needs. Always weigh your options carefully, as these loans tend to have higher interest rates than long-term commercial mortgages. Evaluate your business needs, consider your repayment strategy, and choose a reputable lender to help you navigate the process with confidence. Understanding exit strategy in commercial bridging loans. When applying for a commercial bridging loan, it's crucial to have a well-thought-out exit strategy. An exit strategy is the plan in place to repay your bridging loan when the time comes, as these loans are designed to be a short-term financing solution. They can be more expensive than longer-term debt, so having a clear and solid exit plan is essential. One common exit strategy for commercial bridging loans is refinancing the property with a conventional commercial mortgage. You might use the bridging loan to purchase the property, carry out necessary repairs or improvements, and then obtain a commercial mortgage based on the increased value of the property. This strategy allows you to improve the property's condition and secure better mortgage terms than you might have achieved initially. Another possible exit strategy is selling the commercial property, after completing maintenance or improvements financed through the bridging loan. In such instances, the proceeds from the property sale would be used to repay the loan. Keep in mind that the lender will want to verify that the property's asking price is realistic and achievable. If your commercial property generates income, you might also consider repaying the bridging loan with funds owed to you from customers. This approach requires careful cash flow management and reliable income streams to ensure that the loan repayment aligns with the bridging loan's term. When planning your exit strategy, it's essential to consider potential obstacles and delays that could affect your ability to repay the loan. These may include unexpected repair costs, market fluctuations, or refinancing complications. Be prepared to adapt and revise your strategy if necessary, remaining focused on the ultimate goal of repaying your commercial bridging loan in a timely and cost-effective manner. Identifying potential risks and costs. When considering commercial property bridging loans, it's important to be aware of potential risks and costs involved in order to make a well-informed decision. Being attentive to these factors can help you navigate the borrowing experience with confidence. One of the primary things to consider is the total cost of the loan. Commercial bridging loans often come with higher interest rates compared to traditional loans, as they are short-term and meant to be repaid quickly, usually within 3 to 18 months. So, when calculating the total cost of your loan, make sure to factor in the interest rate and any additional fees associated with it. You should also be aware that certain fees may be applicable with a bridging loan, such as legal fees, broker fees, and valuation fees. As you contemplate your options, don't forget to take these expenses into account and budget accordingly. Keeping track of these costs will assist you in understanding the true overall burden of the loan. Another potential risk associated with commercial bridging loans is the reliance on an exit strategy. Typically, this involves selling the property or securing longer-term funding once the bridging loan has been used for its intended purpose. However, if your exit strategy doesn't materialize as planned, you might face higher costs or even the risk of losing your property. Your credit history can also play a significant role in the bridging loan process. While some providers may be more flexible in offering loans to borrowers with a less than perfect credit score, you should be mindful that a poor credit history might lead to higher interest rates or stricter loan terms. In summary, being aware of the potential risks and costs of commercial property bridging loans can help you make an informed decision. Always consider the total cost, associated fees, dependence on an exit strategy, and the impact of your credit history when evaluating your options. By keeping these factors in mind and staying vigilant, you can confidently pursue the opportunities that these loans may present. Regulations and legal aspects. When considering a commercial bridging loan, it is essential to have a thorough understanding of the regulations and legal aspects that come into play. There are two types of bridging loans, regulated and unregulated. The Financial Conduct Authority, FCA, governs regulated bridging loans. These loans typically relate to a borrower's main residence or residential property transactions where the borrower or their family will reside. It's important to note that FCA-regulated loans come with additional protections for borrowers, ensuring responsible lending practices are upheld. On the other hand, unregulated bridging loans are not governed by the FCA and are often used for commercial property transactions, property development, or investment purposes. Although these loans don't offer the same level of borrower protection, lenders must still adhere to general lending principles and guidelines. As a borrower, it's vital to provide all relevant details to the lender, including your plans for repaying the loan and a clear exit strategy. This will typically involve repaying the bridging loan through refinancing, selling the property, or securing long-term commercial funding. When using a commercial bridging loan for property development or renovation, ensure that you have the necessary planning permissions in place before proceeding. Additionally, check for any legal restrictions that may affect your property plans, such as listed building status or environmental protections. While commercial bridging loans offer a viable solution for short-term funding needs, it's imperative to understand the regulations and legal aspects involved. Always consult with legal and financial professionals to ensure that your bridging loan falls within the appropriate guidelines and does not expose you to unnecessary risks. Commercial property types for bridging loans. When considering commercial bridging loans, it's important to be aware of the different types of commercial properties suitable for this form of financing. In general, commercial bridging loans can be used for a variety of property types, including land, offices, retail units, and pubs. This section will provide a brief overview of each of these property types. Land bridging loans can be an ideal solution when purchasing land for development purposes, as they provide short-term finance that can be quickly arranged. Whether it's agricultural land, land with planning permission, or even brownfield sites, commercial bridging loans can help you secure the necessary funds to complete your transaction and move forward with development plans. Your lender will need to see your clear strategy to repay the loan, typically through the sale of the developed property or by refinancing. Office properties can also benefit from commercial bridging loans, particularly when there is a need for fast and flexible funding. These types of loans can help you acquire a new office building, refinance an existing one, or carry out renovations and improvements. Again, it's crucial to demonstrate a strategy for repaying the loan, which may involve leasing the office space, selling it, or obtaining long-term finance. Retail units, whether it's a high street shop, shopping center, or retail warehouse, bridging loans can assist with acquiring retail properties. These short-term loans can provide the necessary funds to refurbish, renovate, and even expand your retail space. As with other property types, your chosen lender will need to understand your repayment plan, which could involve leasing the units, selling the property, or obtaining longer-term finance. Pubs, acquiring or refinancing a pub can also be supported by a commercial bridging loan. This type of loan can help you purchase a struggling pub, fund refurbishments, or cover a temporary cash flow issue. Similar to the scenarios mentioned above, you should have a clear repayment strategy in place, which may consist of an exit through the sale of the pub, a long-term commercial mortgage, or other refinancing options. Overall, commercial bridging loans offer flexibility and fast financing to a wide range of commercial property types. Remember to have a clear plan for repaying the loan and communicate this to your lender when applying for this form of short-term finance. Commercial bridging loans for specific groups. Commercial bridging loans can be a beneficial source of short-term financing for various groups, including limited companies, foreign nationals, small businesses, and individuals. In this section, we will outline how these entities can utilize commercial bridging loans for their specific needs. Limited companies. If you're a limited company, commercial bridging loans can provide necessary funds to purchase or refinance a commercial property. They are especially useful when encountering a gap in financing and can help to ensure your property transactions move forward. These loans have flexible lending criteria, allowing your business to secure funding as quickly as possible. Foreign nationals. As a foreign national looking to invest in UK commercial property, you might encounter financing challenges. Commercial bridging loans offer a solution by providing quick and short-term funding, even if you don't have a strong UK credit history. They offer more lenient lending criteria, focusing on the property's potential income rather than your credit score. Small businesses. If your small business requires additional funds for commercial property acquisition or expansion, bridging loans can assist. These loans allow you to take advantage of time-sensitive opportunities in a competitive market, ensuring that your business remains viable. The repayment flexibility of bridging loans caters well to small businesses' fluctuating revenue. Individuals. For individuals seeking to invest in a commercial property, commercial bridging loans provide accessible financing at shorter notice. They can bridge the gap between selling your existing property and purchasing a new one, or accommodate temporary cash flow issues. The loans are especially helpful when the property may require renovations before it can generate income. In conclusion, commercial bridging loans can be a valuable financial tool for a wide range of entities, from limited companies to individual investors. By offering fast and temporary financing, these loans enable you to seize opportunities and fulfill your commercial property goals. Conclusion. In summary, a commercial bridging loan can be a valuable financial tool when embarking on a commercial property purchase. It provides short-term funding to bridge the gap between selling your current property and acquiring a new one. This type of loan can be crucial, especially when conventional financing options are not available or sufficient. When considering this type of loan, it's essential to research various lenders and the specific terms of their offers. Each lender will have their own set of requirements, interest rates, and fees. Assessing these factors carefully can help ensure you choose a loan that best suits your needs and financial circumstances. It's important to understand the risks involved with commercial bridging loans, as defaulting on your repayments can lead to loss of your commercial property. In this regard, having a well-planned exit strategy in place is crucial. This strategy can include refinancing through a long-term loan or selling the property to repay the loan within the agreed term. As you move forward with your commercial property acquisition, remember to approach each aspect of the process with confidence and knowledge. This includes conducting thorough market research, creating a financial plan, and understanding the potential risks and benefits of a commercial bridging loan. By doing so, you can make informed decisions and successfully navigate the complex world of commercial property financing. What is the process of obtaining a commercial bridging loan? To obtain a commercial bridging loan, you typically need to follow a few steps. First, research suitable lenders who offer commercial bridging loans, such as banks or specialist finance companies. Once you find a suitable lender, submit your loan application, which will usually include information about your property, financial situation, and the purpose of the loan. The lender will then assess your application and carry out a valuation of the property to determine the loan-to-value (LTV) ratio. If your application is successful, the loan is usually provided within a short time frame, sometimes in as little as 10 days. How do interest rates differ for bridging loans and traditional loans? Interest rates for commercial bridging loans are typically higher than traditional loans due to their short-term nature and the perceived higher risk associated with them. What are the eligibility criteria for a commercial bridging loan? Eligibility criteria for commercial bridging loans may vary by lender but generally include the following requirements. The property must have more than 40% commercial use, a viable exit strategy for loan repayment must be in place, such as refinancing or selling the property, and the borrower must have a good credit history and demonstrate the ability to make repayments. How long does it take to get a commercial bridging loan approved? The approval process for commercial bridging loans is typically faster than for traditional loans. In some cases, it can take as little as 10 days from application to loan approval and funds being made available, depending on the lender and the specific circumstances of your application. This makes bridging loans a popular option for those needing funds quickly. Can a bridging loan be used for purchasing commercial property? Yes, commercial bridging loans can be used for purchasing commercial property, as well as other purposes such as filling auction gaps or addressing broken property chains. These loans are commonly used when there is a short-term financing need or when a quick property purchase is required. What repayment options are available for commercial bridging loans? Repayment options for commercial bridging loans typically include refinancing with a longer-term loan, selling the property to repay the loan, or using other financial resources to pay off the loan. There may also be options for interest-only repayments during the loan term before the principal amount is repaid at the end of the term. It's essential to ensure you have a viable exit strategy in place to meet your repayment obligations when taking out a commercial bridging loan. For more information, you can contact us by clicking the link in the description of this video. Thank you for listening to our podcast. We look forward to coming together again in the next episode to share more information and experience with you. For now, goodbye.